Hello and welcome. You're watching Business Today Television. I'm Tanya Aneja, and this is a very special episode as we are going to discuss momentum investing today. And we'll also talk about India's first actively managed momentum fund, that is SAMCO Active Momentum Fund. Now, SAMCO believes that this fund will open new avenues for investors seeking to benefit from momentum investing, and by capitalizing on the prevailing price trends, the fund aims to outperform the market and generate a good amount of return for investors. So to discuss this fund and its strategy in detail, let's welcome our guest on the show today. We have with us Mr. Viraj Gandhi, who is the CEO of SAMCO Mutual Fund. Thank you so much, Viraj, for taking the time out and joining us here on Business Today Television. And let's just straight away dive into this concept. You mentioned that it is India's first active momentum fund, but there are other momentum funds available also, if I'm not wrong, and we'll come to that in a bit. But firstly, let's understand from you that what is momentum investing all about?
Thank you. Thank you for this opportunity. And as you rightly said, there are other passive momentum funds available. We are going to launch India's first and only active momentum fund. So let's come back to the momentum as a strategy first. What is momentum as a strategy? It's very simple. It is about picking up the players who are in form and allowing the players who are not in form to be dropped. If I have to explain you in a very simpler way, in the example of a game called as cricket, there are two players called Prithvi Shaw and Shubman Gill, who both represented Team India in the Under 19 World Cup, which India won. Prithvi Shaw was the captain who broke Sachin Tendulkar's record, being the youngest player to score Dilip Trophy and was captaining the Under 19 winning World Cup team. He was given the chance in the Indian cricket team before Shubman Gill. But as on today, because Prithvi Shaw is not in form, he has played only 12 matches for India, last represented in 2021. But Shubman Gill is still playing the World Test Championship final, which is going on currently. This is from the game of cricket. But does the same apply in the market? MSCI, which is one of the largest, indices manufacturer, has said very categorically that historical basis pay, the momentum factor, has been one of the strongest generator of excess return for them. And how much excess are we talking about? From 1994 till date, MSCI World Index has given a 10x return on a base of $1,305 billion fund, the ETF that is pegged to it. But the same MSCI Momentum Index has given a 20x return over the same time frame. So momentum in simpler language, meaning picking up the players which are in form, picking up the stocks which are in form, and momentum is defined as something which is going up in short term will keep going up, and something which is not performing in the short term will not perform. So using these characteristics, we can create that alpha for a short period of time for the investors.
Okay, and coming to the characteristics only, Viraj. So, which are the momentum characteristics that you are going to use for this fund, and how is this fund better than the other types of fund available in the market?
So when we have created this active momentum fund, the main pillars of the fund is to keep investing into stock that are showing momentum characteristics first. Second, it is very important to hold on to that particular stock till the time trend is your friend. To sell the stocks that are losing momentum, that means allow the winners to run and cut down on the losers and sit out of the market during the anti momentum strategy. Now, to
Okay.
play this particular momentum strategy, there are two types of momentum strategy that we need to understand. First one is called time series momentum or relative strength momentum. These are the two distinctive measures that we have used internally. Time series momentum actually tells us about the absolute momentum of the stock in the past performance by considering its own independent return. And on the other side, cross-sectional momentum measures the stock performance on a comparative basis to the other stocks. So by using this and a combination of lot of data points that we have used to identify momentums like the price volume action, the insider trading deal, the bulk deals, the block deal, and a lot of technical data which is available, we use that thing, measure the momentum and give a momentum strength and score to a particular counter.
Okay, and absolutely. So we are talking about India's first Active Momentum Fund. So, how is active management different from passive management, and what advantages does this sort of management offer? I mean, in momentum investing?
So let me give you some background about it. So when we deep dived into the subject matter and when we saw the data, there are two momentum index listed on NSE: Nifty Midcap 150 Momentum 50 and Nifty 200 Momentum 30 index. When we understood the data, we found some gaps and opportunities that the passive strategy has. The gaps were that both of them were using a very limited universe. So the momentum midcap 150 is using only the midcap 150 names, and the momentum 200 is using only the top 200 names. But we all know when momentum comes, it is far higher and larger in the midcap, small cap, and a micro cap segment. So the first differentiation and the gap that we found was we at Samco Mutual Fund in active momentum strategy is going to widen our universe to the first 750 stocks. The number of stocks that this both passive momentum index are catering to are fixed at 30 and 50, which is not the right strategy what we believe in a good or in a bad market, and I will give you examples of that. And they only use relative momentum. If you just remember what I said a couple of minutes back, we use relative and absolute momentum, both the time series and the and both the strategies are being used. The the two major difference apart from these three differences that the passive rebalances itself after every 6 months. So for this kind of a fund, rebalancing after 6 months is a very long time frame, is what we believe, and we have seen enough examples of what happens to stock between these 6 months. And in a bad market, passive will always be 100% invested. But for this strategy, we need to sit out of the market and use hedging as a tool so that we protect our downside. So these are the opportunities that we saw, and this is what we are going to do better than passive. And that is why there is a need of an active fund manager on the momentum index side.
Okay, so you are saying that this fund would be effective in a bear market also?
Yes. So if I have to give you an example of 2008 and 2019, the backtested data would have shown me that at 2008, at the beginning of the month, I would have had some 42 odd open positions. But because the score was falling and the strength was falling, we exited 34 positions within a month. And from that level, we saw another 43% correction in the market. So that is how effective it can be in a bear market if we are not 100% invested. Similar
Okay.
such thing happened in 2019 also. We had 42 odd open positions in the beginning of the month. But in the next 18 days, just because we saw the fall in strength and fall in the Z score that I just explained you, we exited 29 positions in 15 days. But after that, we saw another 25% cut in the broader index. And we all know when we see such a big correction in the broader index, what happens to mid cap, small cap, and the micro cap spaces. So it is very important to do a real time rebalancing and work like an like and work and make sure that the hedging happens in a bad market to protect the downside.
Okay, absolutely, Viraj. And also, the NFO period is from June 15th till I think June 29th. And
Yes.
the subscriptions will not be accepted after the NFO period. Why is that?
See, for this strategy to work, it is very, very important to manage the fund flow. Very important. The amount of alpha that we are trying to generate is inversely proportionate to the larger the size of the fund. So it is very important to manage the fund at every point of time. Second, it's a point entry and point exit kind of a strategy. In between, if I keep getting the flows, it is not going to be helpful in generating that alpha that we are trying to build over here. And third, very important, this is a very different way of playing a particular strategy. So you all know about value and growth, where people can keep giving in the money and the fund managers are happy to buy at all levels. But for this strategy to work, we need the absolute amount of money to be known at all point of time. And that's why restricting entry of the fund from time to time is the key to make sure that the alpha that we are trying to generate is been protected for the investors.
Okay, you mentioned value and growth. So, among value and growth stocks, which one do you prefer?
So we at SAMCO Mutual Fund as a house, we prefer growth in style of investing. If you would have known about my first two offerings, the Flexi Cap and ELSA that we did, all the things that we have invested over there are all related and growth oriented stocks. So we are more tilted towards growth, but obviously growth at a particular value, not at all values.
Okay, absolutely. And since you are with us, so let's talk about your market outlook also. So, what are the triggers that you're working with, and what are the, I mean, what is your outlook for the Indian markets if you talk about short term trend or maybe medium term trend?
So I'll tell you two objectives of this particular question is what we look at. First one is India as a stock. India as a country is the most preferred stock at this point of time because of the inherent strength of the country and the numbers that we are seeing domestically. This is point number one. Point number two, because of this thing, India was comparatively expensive in the previous 18 to 24 months. And that's why we saw that kind of a time correction or what we call as a period of consolidation in the Indian capital market space for the past 15 to 18 months. We, whenever we saw an 18 to 24 months of consolidation in the broader indices, the next 24 months are always very, very good for the broader index. And that is what we are seeing for the past 2 months also. The differentiation of the interest rate between India and US is now again broadening up, and that is what is leading to a lot of money flow coming back to the Indian capital market. So our outlook for medium term to long term is positive for the Indian capital market. But yes, in the near term, we are overheated at this point of time. Some bit of cooling off and some bit of coming down from the from the levels that we are today is always going to be healthy for the market, and it is going to create a lot of opportunities for investors to pick up the right stock.
Okay, absolutely. And what about the sectors that you're bullish on, especially at this point in time?
So rather than naming any particular sector, I will tell you what we are looking at. We are looking at fundamentally good companies and sectors where we have seen time correction, price correction, but with an earnings upgrade. So wherever we have seen a 25-30% kind of an earnings momentum in the past 18 to 20 months, but at the same time frame, that sectors and that stock have taken a beating by let's say 25-30%. So there is a 50% kind of a correction that has happened into that companies and sectors. That is where the risk reward is favorable, and we particularly like that kind of sectors from the current levels.
Okay, and any space that you're avoiding at this point in time?
There is a lot of overheating in most of the names which are hitting to new 52-week highs on the private sector banks, and we typically want to avoid stocks which are very, very expensive at this point of time. So few pockets of the market are showing that kind of exhaustion in valuation, but a lot of pockets in the market are showing good value opportunity along with growth prospects, and that is where the next level of wealth creation can happen in the next 3 to 5 years.
Okay, and also what about broader markets? I mean, they also have been doing phenomenally well. So, your thoughts on broader markets?
So broader markets are very good. So that's what we said, that there is a need of an active fund manager because the broader markets give you a bigger opportunity to create that kind of a wealth for the clients. So broader markets are doing fine. What we have to look is a bottom up approach at this point of time because the broader indices are nearly at all time highs. So we need to do a lot of stocks picking, and the bottom up approach is what we will be looking at from the current level.
Okay, absolutely. That's the word coming in. And lastly, your advice for all the investors at this point in time and any mistakes that they should avoid?
See, during April 2020, if you know, during that phase, a lot of new investors came in this particular market and they made a lot of money by buying anything because everything was moving up. That was the time when people thought that there is no need of intermediates, there is no need of market experts, and they started to invest directly. But since the last 18 to 24 months, where market went into the consolidation phase, they all understood the need of a expert advisor. And my advice to all of them would be to make sure that they do their homework thoroughly. They do not try to run into the space which do not have their fundamentals behind them. They do not end up buying stocks just because it's popular at all point of time, and they do not end up getting stuck into their wealth into the stocks where the wealth can be destroyed, where we have seen it time and again. And this is the kind of market typically where the momentum starts picking up, that all these stocks start flying very, very high and becomes very, very attractive to them. So it is very important for them to realize what not to do in markets than what to do in the markets. The thumb rule of the market is to know what to avoid and what not to do. If they are thorough with that particular thing, I'm sure that wealth can be created by them also directly from the markets.
Okay, absolutely. Golden words coming in. And on that wonderful note, thank you so much, Viraj, for sharing all these wonderful insights with us and being with us here on Business Today Television. Thank you so much.
Thank you. Thank you very much.
So, with that, let's wrap up this special episode. But you stay tuned for all the latest market updates. And many thanks for watching.
If you like the video, do like, comment, share and subscribe.